The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We got 24 minutes to go until the start of trading, but markets are off to the races to the downside. We have St. Louis Fed President James Bullard throwing a little bit of gasoline on the fire, talking about rate hikes coming as soon as potentially next year. So much for 2023. You should mention that he was one of the dot plots in 2022 already, so not surprising that we knew as of Wednesday that we had dot plots where we had Fed presidents that were in 2022. Not sure why it's getting so much press that you have them coming out and saying, I'm the one that was one of the 2022 dot plots. Therefore, I think that rate hikes might be coming as soon as 2022. Nonetheless, the market accelerates a little bit lower. We're negative 26 points on the session at 41.73 was the low, trading 41.86 right now on the S&Ps. Growth stocks, NASDAQ 100 pulling back a bit. We're off about 0.4%. I mean, look at where we are, though. We're right back to basically where we were as of 10 a.m. in the morning on Fed Day, let alone we're still above in the NASDAQ 100 where we were as of the announcement by the Fed and the press conference, et cetera, sitting at 14,090. The Dow really taking a hit. Negative territory in a big way continuing. The Dow is looking to put up the fifth consecutive negative day since January. So quite a decline on the Dow on a consistent basis all this week. I mean, you're talking about backing it up to where we were 1 week ago, folks, in the Dow. You're talking about 1,100 points higher than where we're trading at right now, 33,432. Jumping around to commodities, gold contract taking a hit on those comments by the Fed president of St. Louis as well. Gold down again, approaching the lows we had yesterday at 17.77. You got silver up 28 cents, but taking a hit as well. That's 28 cents technically on the session that closed yesterday. But you see the hit that it took this morning from about 26.50 down to 26.14. And we got to jump to notes and bonds as we see a little bit of a pullback. 131.29, and that is correlating to a yield. Thought I had it up. Do I have it up? Yeah, I don't have it up. About 1.5% right now on the 10-year. So let's talk about the comments. There's the headline from CNBC. They have a self-interest of publicizing it since he was out there on CNBC at about 8 a.m. this morning. Did not catch the interview myself, but catching up on what is happening from the market. You had Bullard telling CNBC that he sees an initial rate increase happening in 2022 as inflation picks up. The consensus, of course, we saw was 2023. But as I mentioned, we already knew that some of the Fed presidents had the idea of 2022 because it was reflected somewhat on the dot plot. You love to have an economy growing as fast as this one. You love to have a labor market improving the way this one has improved. He said of the current conditions, but he also mentioned inflation in there. And as I mentioned in the update, we're expecting a good year, a good reopening, bigger year than we're expecting, more inflation than we were expecting. There you go. I think it's natural that we've tilted a little bit more hawkish here to contain inflationary pressures. Shouldn't be too surprising with what came out in terms of what was in that report. And however, he cautioned that the growth is bringing faster than expected inflation, adding that you could even see some upside risk to price pressures that by some measure are running at the highest level since the 1980s. Bullard said he sees inflation running at 3% this year, 2.5% in 2022, before drifting back down to the Fed's 2% target. He might be making those estimations if potentially the Fed has a rate hike in 2022. Now, if you look at the Fed official forecast, I believe it was about 2.2 or 2.1% they were looking for in 2022. If that's what you think is going to happen, by the time you get to the end of 22, you've already had 2 years of 2.5 to 3% inflation. He said, to me, that would meet our new framework where we said we're going to allow inflation to run above target for some time, and from there we would bring inflation down to 2% over the subsequent horizon. So he's comfortable with it a couple years. Not too surprising, but anytime you see a voting Fed member saying that, guess what? We might get rate hikes next year. Market's not going to like that at all. And we're trading at 41.83, down a bit, down 0.7% in that S&P. All right, what else we got going on? Jumping around to some of the headlines. Going to jump to commodities. Crude oil declining with commodities pressured by the Fed's plan. Now look at some of these numbers here in terms of the decline. Is that what I had? I thought it was. Where are we today? No? Thought I had. Here we go. That's what I wanted to pull up. Speaking of commodities, so commodities bounced the day after falling. I mean, look at the week-to-date performance of some of these. Now, we're all familiar with crude, okay? But, man, you start jumping to gold, copper, silver, platinum. Look at these numbers, right? You jump to food and materials. This is a weekly basis we're talking about on commodities here, okay? Cocoa, barely. Then you get coffee, cotton, lumber really pulling back. That's gained some headlines this week as lumber pulling back from some of the run that it's had. OJ, sugar, corn, craziness, soybeans, and then you get the hogs, cattle up, and live cattle up across the board. That's about all that you have trading positive on the commodities after that one hit. Now, jumping over to crude, getting a little bit of a bounce, even in the last, in the last few minutes. There's the acceleration yesterday in crude. This morning, catching a little bit of a bounce since about 8:45. We're back to 70.46, technically negative about 32 cents on the session. You started yesterday above $72, so you're about $1.50 to the negative side right now in crude. Let's just jump around to some of the FANG stocks and see how we're looking this morning as we get a little bit of a pullback in the NASDAQ 100. You're down 66 points. Amazon, my goodness, quite a rocket ship yesterday in a big way. Amazon pushing right near all-time highs. This morning, you're going to be off a bit, down about $20 is all you're talking about on the open at $34.68. We were trading at $3,400 at the open as of yesterday. Microsoft, continued strength, traded up $5 yesterday to $261, backing off a bit to $259. Google just bumping up near all-time highs almost, backing off a bit this morning. But look at Google on a daily going long-term. Is that an all-time high? That was an all-time high yesterday. Continuing the run. Google, 25.43. Let's jump over to the VIX and see how we're reacting this morning. VIX, talk about a little volatility, right? Man, it doesn't take long in this market. Now, the one thing that is remarkable is, since basically February, you've had a series in the VIX of, let me back this out again, lower lows and lower highs, right? So we got a 37 high in January, 1969 low. 31.90 high in March. We didn't make it quite down to 15.38. This is jumping around because of where I have this on my chart. But nonetheless, we make it down to about 18 in March. We make it down to that low of 15.38 there, about April 12th. 28.93 is our spike high in the beginning of May. We made it down to 15.04, folks, June 14th. And just like that, we're back up to 20. But as I said, it is a series of lower lows and lower highs, but the VIX still with the ability to spike 1972 on that volatility index right now. And if the tapering conversation has begun, which is kind of what Bullard is out there saying this morning, then the market might start paying attention because it's not going to be that long until we get the next meeting. It is June 18th already. If we come out of the summer and we're into September trading and the conversation is that we're hiking rates because of inflation happening at the beginning of 2022, as in 2022 meetings are in play because inflation is just too hot to deny, this market will not like it coming that quick, folks. S&P is going to be really interesting to see where we hit in terms of this line. We've bounced on this level on multiple occasions on the S&P, bumping right up against that lower trend line at 41.86 this morning, down 26 points. Stay tuned, folks. We'll be right back in 3 minutes.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got about 12 minutes to go until the start of trading for Friday right now. We're negative 26 points on the S&P, 4186. We got the Dow accelerating negative 268 points right now. The Dow now 1,600 points from its all-time high. Compare that to the NASDAQ 100. Was that an all-time high? It sure was. We're only about a span of how long? 6-7 hours from all-time highs that we made in the NASDAQ 100, 14,204 overnight. Jumping around to crypto. So Bitcoin backing off a bit. We made a high of 41,335 earlier this week. Back down to 37,130. Mark Cuban in the press yesterday, really, this story hitting. So he was in there trading a DeFi token. Supposed to be kind of a stable coin is what they refer to them as. So much for that, folks. Who coined the term stable coin for something that can crash 100% in one day? The remarkable thing here is Cuban just doing a tremendous disservice to investors, and I'm being super kind on the air with the words I'm using for what he's out here doing in terms of pumping his activity in tokens like this. Okay, so he's out there pumping his own book basically. All right, and the part I really have a problem with this for all the investors out here, it's going to make very simple sense in terms of the terminology he's using. All right, so he was out there pumping this blog on Sunday. Okay, this thing went BK this week, all right? So he's out there pumping it on his blog on Sunday, and he's out there saying that he's a liquidity provider, okay, LP, okay? And what he's saying is he uses his fees that he's using in a 24-hour basis to pump out his annualized return of 206%. I mean, folks, imagine, for instance, I'm trading Amazon yesterday, and Amazon was up like, what, 1.5%, something staggering, right? Amazon traded from 3,400 up to almost 3,500. You added almost 100, okay? You added, it was 2%, something silly Amazon was up. And if I said to you, I'm just going to buy Amazon every day because it was up 2% today, and there's 365 days a year, so that means I'm going to be up, 700% trading Amazon just for the year, and you're out there pumping it on a DeFi token. It's ridiculous to talk about annualized returns on a 24-hour basis in a crypto sector, because what's it do? It promotes it to people that don't know what they're doing, especially somebody like Mark Cuban. All right, he's got the basketball team, he's got Shark Tank, he's got his social media following, etc. So he's out there pumping it. And this is the one that really just rubbed me the wrong way, talking about an annualized return over something that's had like a 24-hour fee. All right, so it's a fee he's looking at. He's probably going to argue it's different from a trade because those fees might be able to run. But guess what? It took less than a few days for this thing to go from 60 to, I love saying it. How many zeros is that, folks? 1, 2, 3, 4, 5, 6, 7, 5, 7. 0.00000057. $60 to zero, and he's out there talking about annualized returns of 200+% with very little risk, in his opinion, was what was kind of insinuated there, saying that fees earned in 24 hours. It's just an incredible disservice. It's a joke. He shouldn't be doing it. Not sure why he is. But the best part is that what's the headline say? He calls for regulation after trading token that crashed to zero. So he's in there pumping that he's going to pull 200% of a return, and he loves that idea. Why is he pulling 200% in this, folks? Because it's unregulated, and there are risks everywhere. So he's out there loving this thing, pumping it on his blog when he thinks he can get 200%. When the thing goes to zero, he talks about stablecoins need more regulation. I mean, that's just... do what you want with that, folks. Wanted to bring some attention to it because it's just not right. Somebody in his position, what he's doing out there. And hopefully he pays a little bit of a toll because I'm sure some people really lost some money when he was out there pumping it on Sunday and the thing goes BK during the week. S&P is down about 30 points right now at 41.82. Jumping around to what else we got going on. Got to jump to this story about whether it's COVID here and in the UK. So talking about a UK study. You know, I just encourage people, folks, it's beyond the market, but the market needs it to get back to 100%, folks, so it does tie in. But if you know people out there who are of the younger variety, you know, and I'm talking about people even in their 20s, okay, because that's what, and I want to make sure I have this. Do I have it up? I thought this was the article. I got to make sure I find it because the UK right now is dealing with quite a surge in a big way. No, that's not going to be it. All right, I got to find it. They got about 11, 12,000 cases in a country that has 8 out of 10 people vaccinated. The UK has 66 million people, folks. U.S. has about 5 times the amount of people. That would be equivalent to about 60,000 cases in the U.S. right now if 8 out of 10 people in the U.S. were vaccinated, which is not even close. Point being, where is it focused? 20 to 29-year-olds, that information was in the UK. And I'll bring it up more. But this goes on in terms of talking about that it could actually have an impact in terms of long-term loss of brain tissue. You had Scott Gottlieb out there talking about this, and it even goes to the fact that that could somewhat explain maybe the destruction of brain tissue in terms of why people lose their sense of smell. So you had a new study out there talking about in the UK. Just scary stuff. If you can get out there and get vaccinated, folks, you know, we're not quite over it yet. Florida, you know, nationwide, I think we're 12,000, 14,000 cases a day, something like that. Unfortunately, in Florida, we're pushing almost 2,000 of those cases in Florida alone. When you get the variants, if you're not vaccinated, we're not quite out of the woods, folks. Take care of yourself. It makes sense and get it done. And as we speak, this market bumping up against the lows right now. It's not stopping with the S&P down 33. Market might be coming to the realization that, guess what? We might be talking about rate hikes a little bit sooner than we might have thought. And folks, stay focused on the inflationary data because it's going to take a while to make up 8 million jobs, okay? The Fed, and I know you know this, but the way to think about it, the Fed is not going to have to worry about pulling back stimulus because we've made up all the jobs and we're at full employment. They do have to worry that, but they're going to have to worry about inflation a lot sooner than that. So their worry, the market's worry, is not that, okay, we've made up the 8 million jobs. The Fed's now going to step back from their role of providing stimulus in the tune of 0% interest rates to the tune of $120 billion a month in bond buying. No, what they're going to have to do is they're going to have to step in and scale back stimulus if they feel like inflation is too hot and that they have to step in. Otherwise, it's going to run rampant, and that's going to hurt the recovery as well. That's the risk in this market, folks. Is it transitory? And that's where we have to have biases as traders, okay? The market's trading at a price with an expectation. You as a trader are going to have an expectation that maybe that price is overvalued or undervalued. My opinion is it's going to be more and more difficult to deny the rampant inflation throughout this economy, and I don't envision it's going to be as transitory. It may be transitory, but I don't envision it's going to be as transitory as maybe Chairman Powell would like it to be. I think Bullard made some great points out there saying, from where we were to where we are right now, the recovery is quicker. The GDP growth is now higher than we thought it was going to be. The inflationary data is definitely higher than we thought it's going to be. They upped their inflationary numbers for this year to 3.4% from 2.4%, but because they had to, folks, the numbers wouldn't let them not do it. The inflation is here this year. We know it. The only question now is whether it's transitory. They're going to wait for that data to prove it's transitory, because they're not going to make the leap of saying, well, we're going to scale back stimulus because we think it might be something that's going to hit us in 2022 or 2023. They're really going to wait for the proof of that, and that's why you only saw them adjust their inflationary data by 0.1% for 2022 and 2023. I would argue that from their prior meeting, they could probably make a leap that there's going to be more than 0.1% greater inflationary pressures next year and 2023, but they're not willing to make that leap just yet, but you can as a trader. Stay tuned, folks. We'll be right back in the Market Open.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Just like that, we got markets open, folks. We got the S&P right near the pre-market session lows. We're down 35 points right now, trading at 41.77. NASDAQ 100 actually catching a little bit of a lift. The strength continues. We're negative 46 points. But that's only 1/3%, trading at 14,109. The Dow, talk about a laggard accelerating lower, 33,304. Russell down 1.4%, 2252 right now. Jumping around to commodities on the open. We got gold hanging right near the lows, 1776. We're technically $2 positive on the session. You see the sell-off we got on the comments by St. Louis Fed President James Bullard this morning. More rate hikes may be coming next year. Silver, same type of deal. Positive for the session technically, but pulling back from where we were pre-market this morning. And we'll jump to notes and bonds. You see the acceleration. We're basically sitting at about 1.5%, folks. 1.497 to be exact. We'll call it 1.5% on the 10-year right now. And the 30-year is positive by 13 ticks right now, trading at 160.04. And let's take a look at the volatility index as the S&Ps are now down 41 points. The VIX, we got a 20 handle at 2011 in that volatility index. Really interesting to see where this S&P goes, folks. I've talked about it many times, but you don't have channel lines like this often that get held up so many times. I mean, look where we've been, right? I really started this channel line, which is great. If I cancel my left extension, you know, this lines up extremely well from the run that we had beginning in November. And you're talking about, folks, about 1,000 points in the S&P. You trade from 32.25 to 42.58. We're still sitting almost about 1,000 points higher. Okay, so that channel line, if you look at where we are, pretty well defined across the board. The top end and the bottom end lining up, multiple tops across the board, multiple bottoms across the board. Just missed that bottom in February. We touched that line in March. We touched it again towards the end of March. We bounced a couple occasions in May off that level, and we are just back to that trend line in the S&P, trading at 41.76 right now. Be interesting to see if we break that level where we go. Now, as I mentioned, that is where this trend channel was created, as in where you know, it lines up most easy, maybe, or easiest, you could say. But if you extend these to the left, which is so interesting, where are we? Extend to the left. There we go. Let's extend the top line to the left as well. We back it out to a 5-year daily to get the full line of COVID. We zoom it in, and there we are. Pretty well defined that is where we drew the trend channel line, and look how well it matches up. You know, if you're using linear regression, you'd be familiar that linear regression, it's talking about the squares of the differences away from the line, all lining up, right? So you have areas where you're going to be above that line and below that line, but it matches the best line format. It's pretty close to where you are. Yeah, you climb below that briefly, and the upper boundary line, you made it above there briefly, but look at that. Anytime we made it above that trend channel line when we had that high in June in the market before pulling back, our first pullback out of COVID, you pull back within a couple days into the trend channel line, and same exact thing in September. We got above that trend channel line, got back within there, and got there, and you can see we're bumping up against the lower boundary line. But just like that, it's going to be a volatile Friday potentially, folks, as we got quad witching as well, with all the options expiring, index, futures, equity, 12 points to 41.82 this morning right now. We'll jump back to the VIX right now, back to 19.27 as volatility persists right now in this market. All right, jumping around to some of the equities that are moving this morning. Stocks making moves. We still have earnings going on. We got Adobe out with their numbers. $3.03 a share, 21 cents above estimates. Revenue top forecast as well. Stronger than expected current quarter guidance. Its shares were higher pre-market. I imagine they're going to continue that run. Adobe, giving it back slightly, up 2.3%. Adobe, you put this thing on a 3-year weekly. That is some strength, folks. Look at that acceleration as it's now breaking above the $500 mark, which it consolidated in between about $450 and $500. Adobe, now $564, up there making all-time highs. And what else? Roku getting a little bit of love on the front page of CNBC this morning. Roku, very strong stock in the long term. I got Rokus all over my house. I do have Roku in one of my equity portfolios as well. Now, you look where this thing has been, right? You back it up to a 5-year daily. I want to see the full run basically we had from the lows of COVID. You're down at a price point of $56.71. This thing accelerates to $4.86. Now, interesting, you put it on a Fibonacci level. You've been back down to almost the exact 50% retracement of this level. A couple occasions, the 382 has been an area of support. Maybe if you're looking to get into it, 321 is an area it could pull back to. This might be the run, though, on the 50%. It might just accelerate higher out of this area. Now, The article this morning, where am I? Here we go. Where am I? Here we go. It's quite a headline. I'm sure Roku's loving this one. How Roku dominated streaming video and why CEO Anthony Wood's now obsessed with content, out-executed larger companies and leaned on an unusual corporate culture to gain a $45 billion valuation. Now, you get into the Analyze tab on Roku, excuse me, and we're talking about $47 billion at this valuation right now. Now, we were higher. Now, you compare that to a company like Netflix. What are we pushing? 250, something like that. Where are we on Netflix right now? 221. So remarkable that a company like Roku is already almost 1/5 the size of a company like Netflix. There's your Netflix chart. We're near the bottom of the consolidation in Netflix. We've been bouncing around between about 500 and call it 575 to the upside. Back to Roku. Now, the interesting part about Roku is that where they're going to be able to make the most of their money, and they're getting into content. They have their own Roku channel within Roku. They're going to be able to sell ads and placements if you're using their boxes to access things. When Netflix founder Reed Hastings spun off the streaming video box he was developing into a little-known startup called Roku in 2008, he thought it would fail. Not so much. Remarkable that that's how it started, right? There was Xbox, PlayStation, Samsung, Apple TV. Frankly, we didn't think Roku had much of a chance. It's a great comment on, the insight a founder can have in terms of being able to persist in that industry, because I would agree. Can you imagine going in a period of time saying, I'm going to create a box to stream content on? And somebody would say, well, what about Apple TV? And you say, well, yeah, I'm going to compete with Apple TV, and I think I can beat them at their own game. It's remarkable, and they did it, right? Let alone that you can do the same thing in terms of viewing content on Xbox, PlayStation. You have the Amazon Fire Stick as well, competing with the richest man in the world, Jeff Bezos. But nonetheless, they got it done, and they've provided content, and they provided value to the tune that's allowed them to grow. And they walked through kind of how they spun it out. Wood received an unfinished device, patents, 20 to 30 Netflix employees, and some cash. In return, Netflix got 15% of the equity. Later, they sold that to a venture capital firm, completely getting out of it. When they stole the stock in 2009, it claimed a $1.7 million gain on a $6 million investment. Talk about a long way from where they were going there in terms of giving up a little bit. If Netflix had held, it would be worth nearly $7 billion today. Did you get that one? They sold it for $7.7 million. It would be worth $7 billion today. Quite the miss on that one, but can't blame them. I would have done the same thing. And to Reed Hastings' credit, since 2008, if you really want to focus things, maybe they didn't have the time to focus on everything that Roku would have needed, because you back things up in terms of where Netflix was in 2008. How about trading at a price point of $3.54 I have on my chart from February of 2008. Netflix now at $500 since then. Not bad in terms of where they focus their energy as well. Stay tuned, folks. We'll be coming back. We'll take a look at Disney, one of the other streaming companies, when we come right back. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now, negative 31 points at 4181. NASDAQ 100 showing continued strength, strongest of all the indices. We got the S&P down 0.7% right now. NASDAQ 100 barely down 0.25%. The Dow off of 1% even, and the Russell catching a little bit of a bump after accelerating lower. Look at that acceleration in the Russell. You're talking about 20 points to the upside since 9:30 this morning, trading at 22.68. The Russell down 0.75% right now. We'll jump to crude real quick. Crude catching a little bit of a bid, continuing up near $71, and got to check in on gold. Gold contract trading at $17.75 this morning. All right, jumping over to Disney. So Disney, we have some Disney in my newsletter, Rocket Equities and Options. A little bit of a pullback here from 203.02. Now, the run we had from November, right? You're sitting in Disney at about 118. All right, you trade up to 203. You talk about a run in a big way, folks. The world grasps that, guess what? Things are going to get back to normal eventually. We have vaccines with 95% efficacy. Disney's going to be able to be in the movie theater business again. They're going to be able to be in the parks business again in some form of normalcy. Taking a little bit longer than I'm sure Disney shareholders may want, which is the reason for some of this pullback. But you trade to 203, you pull back. We're sitting at 173. We put a Fibonacci number on there. The 382 retracement we're looking at about 170. We got to bounce pretty close to that area about a month ago on May 19th, 173.02 this morning. If you're looking to get into Disney, that might be a nice area, 170, that 382 retracement. Also correlating to the gap that we got here, basically back to December. We get below that gap, you might be going to the 618 of about 150. Long term, Disney's going to be a great company, folks. We're now talking about a pullback of $30. You're 15% basically off the top of 203. We're trading at 173, basically almost $30 to the penny, which is correlating to almost exactly a 15% haircut from where we were trading at in March. These prices are putting us back basically where we were trading at December 11th. Disney came out with some gangbuster plans and numbers. They accelerate higher on their plan to really beef up streaming and go full out on streaming on December. You accelerate to higher prices, and we've just been consolidating for about 6 months on Disney. You did get above that level, but maybe a fair consolidation would have been more appropriate between about 170 and 182. Got above that level for a brief moment. Now I'm going to back up Disney for a little bit of a history lesson in terms of where we've been here, because you don't have to go back far to get a full history lesson of Disney Plus. Now, what's remarkable is, folks, if you are looking to get back into Disney, all right, and you get back to a price point of 153, I would not be passing that up. I would be adding to Disney at 153 of that valuation. Okay, the point being, because we're going to get into it here, is that was December 19th. Okay, that was the area. Now, you come into COVID February 17th. Okay, now I'm going to put this on a daily for the 5 years so we can really go back to see the full run we've had here. Okay, now we started to get Disney Plus plans going back to, and I'm going to ballpark some of these dates for the general idea, but we start getting ideas. Let me back it up one more time to make sure I'm getting the full run. Yes, I am, okay? So Disney's under 120. You see on the chart, it's consolidating. We go back to 17. It has trouble getting above 120. It climbs above that 120 price point for the first time in April of 2019, okay? At that time, we got a good idea of the actual pricing structure and the plans for what Disney was going to do on their product, Disney Plus. They come out with the name. They come up with the pricing structure at that time, I believe. Okay, so the market finds out that they're going to undercut Netflix. Pretty surprising. Netflix is pretty affordable. Netflix, they've been raising their rates, but in general, people talk about how it's not expensive, not too expensive, where you really have to cancel it. Now, that's changing a bit as they up their rates a bit. But nonetheless, Disney comes out, what is it, $5.99, $16.99 a month? They're going to bundle it with ESPN and Hulu. For $13.99, $14.99, something very affordable. Market loves that idea. You jump up to $142 right away. Okay. Now, their initial expectations were nothing near, folks, of where they are. I think they were talking about 70 to 80 million subscribers in a few years, maybe something like that. They're now talking about 350 to 400 million subscribers by 2025. Now, they go live, I believe it was somewhere around November. They start talking about the numbers they had, et cetera. In terms of their initial launch, right away, they're at 10 to 25 million subscribers right away. We know how the stories went, okay? Now, my point on bringing this up is that we're trading at 173 right now. Disney was comfortable trading in an area between, we'll call it 140, okay, because it oscillated above the 140 line. Here's 140 on the chart, okay? For the second half of 2019, as Disney was beginning to talk about launching Disney Plus, you had this chart trading above and below 140. Maybe you got as low as about 130, okay? Disney has overachieved in almost every way possible in Disney Plus, folks. It just came out yesterday that they are going to be launching the Beatles documentary that they're doing in Thanksgiving. They're going to launch that for their Disney Plus service. They've been having this on their plate for a while. It was going to be a big event they were going to push into theaters. Disney not quite comfortable, maybe, with the audience that you would maybe go to an event like that. As in, the audience that's going to go to a Disney documentary might not be comfortable just yet going to indoor movie theaters, because it's not going to be the same type of crowd that's maybe a 20 to 30-year-olds, right? Maybe it's teenagers getting out of the house, young people trying to find something to do. They were thinking originally that the Beatles documentary could be a blockbuster. There's only one Beatles, right? But they're just not comfortable with people whether it's people in their 50s or 60s or 40s, just yet getting into movie theaters. So they're going to push it out to Disney Plus, though. They're pushing it out to Disney Plus whenever they can right now, folks, okay? And parks are going to open back up. I've already been to a movie theater myself. I've been vaccinated, all right? If you have the ability to, I encourage you to, folks. Get back to life. That's how you get it done. Now, the point being, though, Disney was comfortable trading at about 140 when they thought they were going to do a fraction of the business that they are doing on Disney Plus. Okay, so they have some costs. They're going to go into that. But the parks business come back. The movie theater business has come back. If this thing pulls back anywhere near 150 to 153, we'll probably be adding to it in my newsletter, even though we already have a position, because I just don't see it getting below these levels when the type of valuation that we were going off here had nothing to do with Disney Plus. It almost had nothing to do with it. Before we even knew the pricing structure of Disney, we were trading at 120 Disney Plus. Now, yes, we're $53 above that level. But even when they announced the pricing structure, their expectations were so tame compared to what they were now. I encourage you folks, if you haven't tried my newsletter, check it out, Rocket Equities and Options, on the front page of TFNN under newsletters. Everything we do comes with a 30-day money-back guarantee. And with that in mind as well, we get the weekend coming up. You can also check out Dave White. He did a great webinar in there Wednesday for subscribers. That archive, it's available. You can sign up for any of his services, Path of Least Resistance, Tech Insider, or Art of the Time of the Trade charts. I encourage you, if you're really into the options, folks, the trades that he's going to be making, he was talking about, will be in his daily newsletter, the Path of Least Resistance. You can sign up. You can gain access to the archive over the weekend. You can check that out. Watch it as many times as you'd like, and you get 30 days. If you don't like it, cancel. Ask for a money-back guarantee. No questions asked. You're all set on the front page of TFNN. And with that, we get the market kind of sitting right near that low that we talked about, that trend line. Look at how we bounce around. Really interesting when this trend line correlates to a daily going all the way back to the March COVID lows. And look at how it's just chopping right at that line. We're at 41.76, down 35 points right now in the S&Ps. And let's jump to notes and bonds. We got a little bit of a pullback right there, and we're talking about a yield back above 1.5% right now with the 10-year negative by 4 ticks. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And it's not stopping just yet, folks. We got the S&Ps negative 41 points, 41.71, basically making lows as we speak for the day. NASDAQ 100 off about 82. How about the Dow? 428 points right now in the red. You're talking about we're going to be about 1,750 points from all-time highs in the Dow versus you compare it to the NASDAQ 100 where we're right next to that level still. And the Russell pulling back as well. The Russell, you back things up. The high, we're talking about 23.66. We were right up near that level. Got as high as 23.50. June 9th, we're sitting at 22.50. Just like that, the Russell giving up 100 points from where we were. The highs of June 9th sitting almost to the tick. 22.53. Crude continuing to run to higher territory. Look at this acceleration in crude, folks. 71.14. Don't call it a day in that crude market. Crude continuing to show strength in a big way. Gold contract just hanging right near the lows we had yesterday, 17.75, quite a pullback in gold. Silver up 22 cents, but same deal, right near the lows we had yesterday. And as we mentioned, jumping over to that note and bond contract, the 10-year negative by about 5 ticks at 131.27 this morning. That's correlating to a yield of just above 1.5%. Not bad, right? Not bad, folks, considering where we are right now. That we get a yield of 1.5% with some of the inflationary we got that the market is wrestling with. Let's jump around to some of the other stocks I like to take a look at. We got Uber shares down about 0.6% this morning. We'll jump around to some of the other FANG stocks in terms of where we are. Google shares pulling back a bit from its all-time high yesterday, about 0.8%. Microsoft shares down about 0.5% to 259.59. We'll pull up Facebook shares down about 0.9% as well. We talked about Roku. Roku shares continuing to run up 2.3%. Look at the run they had yesterday, from 335 to 350 plus yesterday. Some of the growth stocks just huge in terms of the run that they've got. Let's check out Zoom shares. There you go. Zoom traded from 360 to 375 yesterday. They're higher today as well, up about 0.8%. And we'll finish it up with a heat map, folks. Let's check it out. The S&P 500, where we are. Look at that. Adobe, NVIDIA, not many positive there in terms of where we are. NVIDIA up about 2.6%. You got Adobe up 1.9%. Everything else is basically red on this chart. And we'll finish it with the NASDAQ 100. Adobe, NVIDIA, and we got DocuSign higher as well. Everything else in the red. Biogen barely in the positive as well. Thanks for tuning in, folks. Have a great weekend. Stay tuned. Our man Basil Chapman's up next. We have live programming all day at TFNN. Be right back, folks.